we've obviously seen this rally in the grain markets here the last couple weeks, and a lot of that's been driven off South America's weather. This is back the beginning of May. We had severe flooding down in the Argentina area, which made it challenging for them to harvest their crop. Estimates point they lost about 7% of their beans. They weren't able to get out of the field. And so that tightened up soybean availability globally, put some concerns there. And then at the same time, Brazil, northern part of Brazil, has been in a severe drought. And that's where we get a lot of winter crop corn, Mato Grosso being right in the heart of that. Now, over the last 30 days, maybe, it's improved a little bit, dryness coming back into Argentina, and some rains moving into central Brazil. Notice Mato Grosso is still pretty dry, though. So there's parts of Brazil very dry for their winter corn crop. We have an office in Brazil, and some of the impacts they've seen, they're very, very tight on corn. Pricing in Brazil has gotten very extreme, and that's where we've seen a shift in corn purchases coming to the U.S. When you look at Brazil corn prices converted into U.S. dollars per bushel and the blue vine versus our U.S. price, last fall, Brazil's prices were nearly $1 a bushel cheaper than the U.S., so countries were buying from Brazil. In the last month and a half, that's inverted. Mato Grosso Brazil corn prices are over $5 a bushel compared to where we're at today at around $4.30. And so now we're seeing those orders shift back to the U.S. and expect that to continue through this marketing year. They've got processing plants that are struggling, or producers struggling to find corn, corn processors struggling to find corn in Brazil. May actually need to become a corn importer to satisfy their needs. And so that's influencing our exports. At the beginning of this year, in January, we were down 25% in corn export commitments or orders. And in the last basically 8 weeks, we've seen that accelerate, and we're just about back to year-ago levels on corn orders from the U.S. The challenge is that we're standing here in early June to get that corn out of the country, because these are orders, they haven't shipped. We've got to get it out of the bin to the elevator to down the river out of the country, which takes some time. So when we look at finishing out this year's marketing year in exports, which will end at the end of August, I see that we could pick up about 100 million bushels of corn exports from what USDA was projecting in the last May WASDE. So we're right now looking at the May supply and demand report. They were looking for about a 1.8 billion bushel carryover. If you notice, for the 2016-2017 projections, we're looking for carry-in to be about 1.7 billion. I don't have the EMI forecast for 2015-16, but looking for carry-in to be about 1.7 into the 2016-17 crop. We have reduced corn acres from what USDA is projecting due to loss of acres in the south. Southern Indiana was delayed a bit in planting, not terribly, but they were still planting corn last week even, getting finished up because of a lot of rains. But I'm talking more of the deep south. Texas, Louisiana, Mississippi had severe flooding, still has had severe flooding in parts, and it delayed some planting in that area, to pushing them to shift to soybeans. Because if you don't get corn planted in that area early, when extreme heat comes in the summer, they really struggle with corn yields. So seeing some acres shifted down there. But even with that, looking for growth in exports, growth in feed usage, we're still looking at about a 1.8 billion bushel carryover. I was in Kansas City 2 days ago, and World Weather did an outlook, and they're anticipating we would switch to a La Nina in September, which puts us past this crop year and being a weather issue, past the corn, the important stages for corn. And so they're not seeing that. And also, when he looks at the world picture outside of the issues we've seen in Brazil, Argentina, they are not seeing a lot of the global production areas around the world are not in a drought area where we have good subsoil moisture to get this global supplies are in pretty good shape. So looking for a big carryover, another 1.8 billion bushels coming from this year's crop. So we think this premium we've seen come in the markets here in the last few weeks is, for a grain producer, a selling opportunity. And when we're looking for markets to head lower towards fall, pushing down towards the below 350 by fall. So on the soybean side, similar situation. We've seen a big increase in export growth. And a lot of that goes back to the issues in Argentina. Our pricing between the Brazil and U.S. is about the same right now. So as the soybean market goes higher here in the U.S., we'll start to price ourselves out as countries can shift back to buying from Brazil. And so that's going to be kind of keep a little bit of a lid on soybean markets from going back to our the 14, 15 like we saw a couple years ago. So, and similarly on the corn export commitments, we've continued to see purchases orders improve over the past several months. We're still about 7% below year-ago levels in corn export commitments, but anticipate that to continue to improve. Right now, looking for our corn exports from this year to total about 1.8 billion bushels, which would put ending stocks right around 340 million for the 2016-17 crop year. And then looking at picking up bean acres in the south, and then trendline yield, we're looking for a 3.8 billion bushel crop and total supply around 4.2 billion. And with increasing U.S. crush, increasing exports, we still are looking for a 300 million bushel carryout. So in the end, our math isn't much different than USDA's forecast, with the exception that we're looking for a smaller carry-in but increased production because of acreage shifts. So we think bean meal should be peaking out here very soon. We've built enough risk premium in the markets. We still have the question mark of China and what their total global demand and supplies needs will be, but there's enough global stocks of all commodities and grains that we don't see any risk unless we have drought here in the Midwest. So from here, we're basically forecasting lower corn and meal prices until the end of 2016.